All, good morning. So in yesterday's class, we have started discussing about the tax rates. We have discussed about the charging section. Based on charging section, we have discussed how to compute total income, then the tax rates. So in tax rates also, we have started specifically about individual, HUF, AOP, BOI and HAP. Okay. So in that also, we are first discussing the default regime. We are first discussing what? Default regime. So under default regime, what are the tax rates applicable? 0 to 3 lakhs, the tax rate is nil. 3 to 7 lakhs, 5%. 7 to 10 lakhs, 10%. 10 to 12 lakhs, 15%. 12 to 15 lakhs, 20%. In excess of 15 lakhs, 30%. If a person if an individual exact total income is 15 lakhs, what would be his tax? 1,40,000. 1,40,000. So under this default regime, we need not to check whether individual is senior citizen or super senior citizen. Age is not a criteria. Irrespective of age, the same slab rates are applicable. And again, irrespective of whether he is resident or non-resident, same slab rates are applicable. Then we have discussed about the surcharge rates, where the total income is less than or equal to 50 lakhs, then the surcharge is nil. If it is 50 lakhs to 1 crore, then the surcharge rate is 10%. Above 1 crore, 1 crore to 2 crores, then the surcharge rate is 15%. In excess of 2 crores, then the surcharge rate is 25%. If the total income is exceeding like 2 crores, then the surcharge rate is 25%. So this part, restricted part and all, we'll discuss in capital gains chapter. Then we have discussed about marginal relief as well. Marginal relief. How to compute marginal relief? Sir, marginal relief, understand, it will come under the default regime as well as under the old regime. It will come under the default regime as well as under the old regime. Next one, it comes even for companies, firms, AOP, BOI. So to any kind of person, if there is surcharge, then we need to check about the marginal relief. That also, when the given total income or when we are solving an answer, the total income we got is nearer to the top surcharge limits. 1 crore, 2 crores, these are the surcharge limits. If it is nearer to those surcharge limits, then we should compute marginal relief. How do we compute marginal relief? First one, step 1, compute tax on the given total income. Okay. Given total income, let's say if a question is specifically about marginal relief, then you'll compute tax on that total income. Or else, even if you're solving a normal problem also, the total income you got something. So on that first you should calculate what? Tax and plus applicable surcharge. Step 2, find out the nearest surcharge limit to that given total income. Nearest surcharge limit to that given total income. On that nearest surcharge limit, again you should calculate tax plus surcharge applicable. Step 2. Step 3, you should find out the difference between given total income and the nearest surcharge limit which you have taken. Okay, third one. Okay, this we did towards the end of the class yesterday. So that's why I'm again explaining you, sir. See, we have taken the given total income in the previous example or in the last class as how much, sir? 1 crore, 1 lakh. 1 crore, 1 lakh. Good morning all. Triveni, Krishnavamsi. 1 crore, 1 lakh. One crore, 1 lakh. See, 1 crore, 1 lakh is the given total income. So what we have to do? On 1 crore, 1 lakh, we should calculate tax and surcharge. Okay, how much it is? 31 lakh 28,000. Then for 1 crore, 1 lakh, what is the nearest surcharge limit? 1 crore. Because the surcharge limits are what? 50 lakhs, 1 crore, 2 crores. I mean, at these limits only the surcharge rate is being applicable, or again it is changing the slab. That's why. Okay, so compute the nearest surcharge limit to the given total income. What is the nearest surcharge limit here? 1 crore. So on 1 crore we calculated the tax plus surcharge. Then step 3, we have found out the difference between the given total income 1 crore 1 lakh and the nearest surcharge limit. What is the nearest surcharge limit? 1 crore. The difference is how much? 1 lakh. Then we will be finding out what marginal relief. From step 1, you should subtract step 2 and step 3. 69,000 is the marginal relief. Then question, they may not ask us to calculate marginal relief. They may ask us to calculate the tax payable. Sir, 1 crore 1 lakh is the tax total income. You need to find out tax on it. Okay, but since the total income is 1 crore 1 lakh, marginal relief is applicable. You calculated marginal relief. You cannot simply say like marginal relief alone. You need to find out what ultimately tax liability. So what is the tax liability here? Step 4. Tax liability equals to, sir, what is the tax liability na? What is the given total income, sir, for us? On what we need to calculate tax actually? 1 crore 1 lakh. That we already calculated in step 1. So tax liability equals to, take step 1 minus marginal relief. In the name itself it is saying relief. Relief na, it should be added or subtracted. It should reduce our pain. That then only it is called as relief. So that's why we should subtract, sorry, marginal relief will give step 4, sir, for marginal relief. This will make like step 5. Step 1 minus step 4. Then we'll get the tax liability. What is the tax liability, sir, here? 30,59,000. $30,59,000. So now understand why marginal relief will be provided. So let's say a person has total income of 1 crore. A person has total income of 1 crore. Okay. Let us take the Raju has total income of how much? 1 crore will take. Okay. Whereas Bhargav has total income of 1 crore 1 lakh. Total income of 1 crore 1 lakh. See, if you see Raju having 1 crore total income, what is the tax he need to pay, sir? 1 crore na, he need to pay only 29,59,000. Whereas Bhargav is having how much income, sir? 1 crore 1 lakh. If he is having 1 crore 1 lakh, how much is the tax he need to pay? 31,28,000. So take 31,28,000. Sir, compared to Raju, how much extra income Bhargav has earned? How much extra income? 1 lakh only the extra income. I mean the difference between this. So 1 lakh is the extra income Bhargav has earned over Raju. But the extra tax Bhargav has to pay for earning 1 lakh extra is 1,69,000. So Bhargav, first of all, he thought like I earned more than Raju and he thought like he won the race. But actually here, Bhargav is not Bhargav, Raju is only in a better place because even though he earned only 1 crore, he'll be paying, ending up with 29,59,000 only as tax. But Raju has to pay only 29,59,000. But Bhargav has to pay, here it is like Raju, here it is like Bhargav. See, for here, for earning 1 lakh extra income, he is ending up paying 1,69,000 extra tax. If you look at the net earnings after reducing the cash outflow, if you look at only the cash which they are having in their account, Raju will only be in a better place. So it's not justifiable to tax more than what they earn. The incremental revenue is only 1 lakh, but the incremental expense here is 1,69,000. That's why they're restricting this 1,69,000 to the extent of incremental income. What is the incremental income here? 1 lakh. So they're restricting the liability also to the extent of that extra income only. So 69,000 they are giving as relief. 69,000 they are giving as relief. That itself is the marginal relief. So they're restricting our extra liability to the extent of extra income. Okay, but if at all you check at 1 crore 10 lakhs, their income will only be extra. Sir, if you want to check also, you can do 1 crore 10 lakhs also you can do. Their marginal relief will be applicable or not also. Sir, if you see, instead of 1 crore 1 lakh, if you take 1 crore 10 lakhs, the difference between incomes is how much? 10 lakhs. But the liability will not be 10 lakhs. That's why marginal relief will not come into picture. Okay. Incremental liability shall not exceed incremental income. So clear? Are you able to understand the default regime, sir? The tax liability and surcharge rates? Sir, two simple easy chapters are there, 2 7 marks questions. If you don't understand tax rates, you cannot solve or you cannot get easy 7 marks there. Okay? And I'm saying again and again, those chapters there will not be any twist except you understanding the tax rates computations. Okay, so please be clear with the tax rate computations. Now we are moving on to the old regime. Tax rates applicable to individual, HUF, AOP, BOI, AJP. Tax rates applicable to individual, HUF, AOP, BOI, AJP. We are under the old regime. So old regime. So first, sir, here under old regime, sir, first category or first type, individual irrespective of resident or non-resident. Then HUF, AOP, BOI, AJP. All these categories, sir, it's not just about individual. For all these persons, irrespective of resident or non-resident, these slab rates are applicable. First one. Where the total income is, I'm not again keeping the heading, sir, total income is less than or equal to 2.5 lakhs, then the tax rate is nil. Less than or equal to 2.5 lakhs, then the tax rate is nil. If it is between 2.5 lakhs to 5 lakhs, then the tax rate is 5%. Then the tax rate is 5%. If it is between 5 lakhs to 10 lakhs, then the tax rate is 20%. If it is above 10 lakhs, then the tax rate is 30%. If it is above 10 lakhs, then the tax rate is how much? 30%. Up to 2.5 lakhs, nil. 2.5 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30%. Here, who will be, especially for individual, I am writing in this box, sir. Individual, if he is resident, age less than 60 is covered. Age less than 60 years is covered. If individual is non-resident, then irrespective of age covered here. If he is non-resident, even though he is senior citizen, these slabs only applicable, irrespective of age. Okay? If he is resident and then senior citizen, there is a different slabs applicable. If he is resident and age less than 60, then these slabs are applicable. If he is resident but senior citizen, I mean age greater than or equal to 60, then these slabs are not applicable. Only to a non-resident only, irrespective of age, these slab rates are applicable. If he is a resident individual, age should be within 60. HUF, AOP, BOI and AJP, anyhow we are not considering the age factor. Sir, here tell me, on first 10 lakhs, what would be the tax liability? If at all a person is having exactly 10 lakhs year income. Calculate and tell for the first time, no problem. Sir, first 2.5 lakhs nil. So, okay, I am calculating, see. Tax where a individual has 10 lakhs total income. 10 lakhs total income. Sir, how do you calculate, sir? 0 to 2.5 lakhs. How much income is there? 2.5 lakhs is there, but the rate is nil. The tax is how much? 0. And between 2.5 to 5 lakhs, how much income is there? 2.5 lakhs into 5%. It is how much? 12,500. 12,500. Then again, 5 lakhs to 10 lakhs if you take, then 5 lakhs into 20%, how much it is? 1 lakh. Then greater than 10 lakhs, then how much is the tax rate, sir? 30%, but we don't have anything here. So the tax to be computed for us is how much, sir? 1,12,500. This we should remember. For default regime at 15 lakhs, 1,40,000. For the old regime at 10 lakhs, it is how much? 1,12,500. This makes our computations much more easier, sir. Let's say if you need to do marginal relief sum only. What you will do at 50 lakhs, you need to calculate tax. First 10 lakhs, we already know. How much? 1,12,500. On the balance 40 lakhs, straight away you multiply it with 30%. Understood, right? Okay. See, if individual is a resident, and age greater than or equal to 60 years. Sir, 60 years now, there is a question here also. Sir, we are having under income tax previous year assessment year. What is the current previous year for us? 24, 25. Assessment year applicable is what? 25, 26. Now attaining age of 16, there are 2 years span here, starting from 1st April 2024 to 31st March 2026. When he should have get the age of 60? That's the question. His birthday, I mean, he is attaining age on 1st April 2025. Then he is senior citizen only. If he attains 60 years age on 1st April 2025. Why 1st April 2025? First day of assessment year. If he is attaining the age of 60, then he is called as what? Senior citizen. On the first day of assessment year, we should check. On that day, is he having 60 years age or not? If he is having 60 years age, then he is called as senior citizen. Age greater than or equal to 60, but less than 80 years. That also right. Age needs to be checked on first day of assessment year. If birthday on 1st April, and attains 60 years, then also senior citizen. age needs to be checked on first day of assessment year. If birthday is on 1st April and attains 60 years, then also senior citizen. 1st April of assessment year only is birthday. That day only he got 60. Still he will be considered as what? Senior citizen only. See here, the tax rates are like 0 to 3 lakhs. 0 to 3 lakhs. 0 to 3 lakhs, the tax rate is nil. 3 to 5 lakhs, the tax rate is 5%. Greater than 5 lakhs, the tax rate is 5 lakhs to 10 lakhs, not greater than 5 lakhs. 5 lakhs to 10 lakhs, then the tax rate is 20%. Greater than 10 lakhs, then the tax rate is how much? 30%. See, for senior citizens, the basic exemption limit. So first 2.5 lakhs, first 3 lakhs, which we are exempting here, na, that we call it as what? Basic exemption limit. In other words, we can call it as like maximum amount not chargeable to tax. Here, the first 3 lakhs we are not taxing, na. Here, first 2.5 lakhs we are not taxing. Whereas under default regime, we are not taxing again the first 3 lakhs. That is called as basic exemption limit. The other word for it is like maximum amount not chargeable to tax. That is the maximum amount which is not chargeable to tax. Okay. So here understand, this 3 lakh slab is applicable only to a senior citizen who is resident of India. If he is non-resident, then which slabs are applicable? The first one, 2.5 lakhs, that only is applicable. Okay. Then super senior citizen. Sir, again here also, if at all senior citizen is having 10 lakhs exactly income, what is the tax liability? 1 lakh 10,000. For 10 lakhs total income, for a senior citizen, tax liability is 1 lakh 10,000. Then we are moving on to super senior citizen, sir. Individual resident age greater than or equal to 80 years. I am not writing it again, sir, but same here also. On the first day of assessment year only, we'll be checking. Okay, if age is greater than 80 years, then he is called as what? Super senior citizen. Super senior citizen. Up to 5 lakhs, the tax rate is nil. Up to 5 lakhs, the tax rate is nil. Whereas the income is between 5 lakhs to 10 lakhs, then the tax rate is 20%. Where the income is greater than 10 lakhs, then the tax rate is 30%. Then the tax rate is how much? 30%. Sir, here also tell, if a super senior citizen is having exactly 10 lakhs as income, what is the tax liability? First 5 lakhs nil, the balance 5 lakhs. 5 lakhs into 20%, it would be 1 lakh. Not much relevant also, so I am not writing here. Now we are moving on to surcharge rates under the old regime. Surcharge rates under old regime. Surcharge rates under old regime. So new regime or the default regime, are you able to recall them? First 50 lakhs. 50 lakhs to 1 crore. 10%. 1 crore to 2 crores. About 2 crores. 25%. Okay. Total income, surcharge rate. Sir, surcharge has to be levied on total income or tax? On tax. Okay. Total income less than or equal to 50 lakhs. Under old regime also surcharge is nil. If it is more than 50 lakhs but within 1 crore, less than or equal to 1 crore, then the surcharge rate is like 15% of income tax, since it has to be levied on tax. Then 1 crore to greater than 1 crore but less than or equal to 2 crores, then the surcharge rate is here 50 lakhs to 1 crore, it is how much? 10%. 1 crore to 2 crores, it is how much? 15% of income tax. Then again there is another slab, sir. Whereas under the default regime, about 2 crores straight away it would be there. But whereas here, there is another slab, 2 crores to 5 crores. 2 crores to 5 crores, it is how much? 25% of income tax. If it is greater than 5 crores, then it is 37% of income tax. Then it is 37% of income tax. 37% of income tax. Sir, again, under 25% and under 37%, with respect to special rate incomes, so let me put stars here. Restricted to 15% in certain cases. Those certain cases we'll discuss in capital gains. Restricted to 15% in certain cases. We'll discuss in which chapter? That also in capital gains chapter. So again, whenever there is surcharge, again there will be what? Marginal relief. Okay. So let us take an example here. Total income of individual is 5 crore 3 lakhs. Compute tax liability excluding cess of individual, tax liability excluding cess under old regime. Excluding cess under old regime. Total income of individual is how much? 5 crore 3 lakhs. Compute tax liability excluding cess under old regime. So again, first, here sir, the given total income nearer to the surcharge limit or away from surcharge limit? Nearer to the surcharge. What are the surcharge limits are here? 50 lakhs, 1 crore, 2 crore, 5 crores. I mean, where there is a change in surcharge rate, those limits are called as what? surcharge limits. Those limits are called as surcharge limits. Here the given is 5 crore 3 lakhs, which is nearer to the of surcharge limits. So first step 1, marginal relief is applicable. So that's why the tax computation, first we'll take what? Step 1. Step 1, what we should do, sir? Compute tax plus surcharge. Compute tax plus surcharge on what? 5 crore 3 lakhs. So calculate and tell what is the tax plus surcharge on 5 crore 3 lakhs. First 10 lakhs, sir, 1 lakh, sir, individual. I'm giving age also. Sorry for not mentioning age. Age 40. So age 40 na, not a senior citizen also. So since 40 years only na, resident and non-resident does not have any impact. 5 crore 3 lakhs. How do we calculate, sir? Remove 10 lakhs separately. So 4 crore 93 lakhs into 30% plus 1,12,500. How much it came? On that again we need to apply what? Surcharge at a rate of. What is the surcharge rate applicable? 37%. So simply do. Oh, hurry. Take your time and solve. Don't follow others' answers also. You just try on your own. If you don't try, you'll never get it. The problem with all these students who are currently is like, so understand, sir, actually, so we are providing marathons since because you are expecting, but understand one thing, my personal feeling, day before exam, if you watch marathon, how can you clear? I don't understand fundamentally. Okay, day before exam, what you should do? You should on your own, you should take a problem and you should solve and then go to exam. Then you will be knowing where you do mistake or what problems will be coming. Look, I mean, I'll show you the stats also. Just on the day before exam, suddenly every marathon will have 10,000 views hike. Suddenly on the day before exam, 10,000 views. I mean, almost 2,000-3,000 of students, they are not doing anything. Just the day before exam, they are playing a marathon, they are looking it, they are doing watching. You know, watching and verification in audit. So they'll open the answer workbook along with them. So I'll be doing the answer na. So they'll just put tick mark. Okay, sir did correct only here. So such kind of watching will not work for you. Okay, you just open the book and solve. So what I am saying is like, practice on your own. Then only you learn mistakes. Step 1, compute tax plus surcharge on 5 crore 3 lakhs. Sir, what is the tax plus surcharge on it, sir? 4 crore. Calculated, everyone? How much, sir? 2 crore? 2 crore 4 lakh? 16,425. 2 crore 4 lakh 16,425. Varsha, you got the same answer? Huh? Okay. Then step 2. Step 2, what we should do, sir? Oh, what is the nearest surcharge limit here? 5 crores. So compute tax plus surcharge on nearest surcharge limit. Which is 5 crores. How much it is? 1 crore 83 lakhs 75,000. 4 crore 90 lakhs into 30% plus 1,12,500 will get the total. On that again multiply it with or add 37% to it. Sorry, correct only 25%. 5 crores. Okay. So these people already did. Marginal relief is 16 lakh 800. Okay. See, what is the tax here? Step 2, 1 crore. 1 crore 85 lakh 16,000. 1 5. Okay, 15th 625. Okay. Then we should do what? Step 3. Step 3 is what? Difference between five crore 3 lakhs and 5 crores. What is the difference amounts are here? 3 lakhs. So what is the marginal relief, sir, then? Marginal relief is like step 1 minus step 1 minus step 2 minus step 3. What is the marginal relief then? 16 lakh 800. Okay. Did the question ask the marginal relief or the tax liability? Tax liability. Tax liability equals to, how do we calculate, sir? Step 1 minus step 4. How much? 1 crore 88 lakh 15,625. So the other way to check it is like, just to have a cross check, the total of these two will be the tax liability. The total of these two. Why? Because, but why can't we do straight away these things now? First we should identify here there is marginal relief or not. If at all there is marginal relief, why this is correct now? Sir, this is the tax on 5 crores. The incremental revenue over 5 crores is how much? 3 lakhs. What I said in the explanation, the incremental tax also should be restricted to the incremental revenue. That's why 1 crore 85 lakh 15,625 plus this 3 lakhs if you add also, the same thing will come, but that is not correct procedurally. Sometimes you may go wrong also. Okay. Sir, understand here. If this answer comes negative, then there is no marginal relief. Okay. Step 1 minus step 2 minus step 3, if it is negative, then there is no marginal relief. Only if it is positive, then there is marginal relief. Okay. Let me write down there also. The first step itself, let me write down that one. If it is negative, no marginal relief. If it is negative, no marginal relief. If it is negative now, what does it saying? The incremental tax is only more than that of incremental revenue. When marginal relief will come into picture? When the incremental tax is more than that of incremental revenue. If it is negative now, it's going opposite. So that there is no question of marginal relief. So clear? Are you able to understand? Are you able to recall both the tax rates, right? Under normal regime, under default regime. Normal and default, okay. Under default regime, under old regime. Default regime, up to 3 lakhs, 3 to 7 lakhs, 7 to 10 lakhs, 10 to 12 lakhs, and again 12 to 15 lakhs. Okay. 0, 5%, 10%, 15%, 20%, then straight away 30%. Okay. There is no question about senior citizen or super senior citizen. Whereas under the normal old regime, up to 2.5 lakhs, nil. 2.5 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30%. Okay. Surcharge rates are almost same, but there it ends with the 2 crores. Up to 2 crores, it is what? Nil. Up to, above 2 crores, under the default regime, 25%. Whereas under the old regime, 2 to 5 crores, there is a next slab. 2 to 5 crores 25%, above 5 crores 37%. Okay. So then I am discussing about the special tax rates, sir. Special tax rates. These special tax rates are not like just for only applicable for individuals. These special tax rates are applicable for individuals, HUF, AOP, companies, firms. For all of them, these such special tax rates are applicable. The special tax rates which we are going to discuss are not like slab rates. The slab rates we discussed are applicable only for individual, HUF, AOP, BOI, AJP. But slab rate, but these special rates are applicable to all the categories of persons. Special tax rates. And these special tax rates are same under both the regimes. These special tax rates are old regime or default. Then to all the class of persons. Applicable to all the class of persons. Capital gains. First we are starting with capital gains, sir. Capital gains. So we all know under capital gains, how many types are there, sir? Long term and short term. So long term capital gains, LTCG. And there is even short term capital gains, STCG. Long term capital gains and then short term capital gains, STCG. Under long term also there are two categories again. Under short term also there will be two categories. So under long term, sir, there are one is covered by 112A section and this is like 112 section. And under short term also there are two sections, 111A and 111. What are covered under 112A? Under 112A, long-term capital gains arising from listed equity shares. Listed equity shares. What does it mean by listed equity shares, sir? The shares which are traded in the stock exchanges are called as listed equity shares. Then units of equity oriented mutual fund. Units of equity oriented mutual fund, EOMF. Units of equity oriented mutual fund. Sir, mutual fund means they'll pool money and invest in other companies. Okay, it's not just, sir, a mutual fund. Out of the money they pool, they can invest in debt instruments like debentures. They can invest in equity as well. But when we call it as equity oriented mutual fund means more than 65% of their investments are in equity shares only. Then it is called as what? Equity oriented mutual fund. Okay, let's say this fund has pooled 100 crores. Out of them, minimum of 65 crores should be invested in equity shares. Not much relevant, need not to write also. Even if you write afterwards, you'll forget. Don't need to write. So equity oriented mutual fund, percentage not required, but just remember, majorly they'll invest in equity shares. That is enough for us. Okay, units of equity oriented mutual fund. Then third one, units of business trust. Units of business trust. Sir, this also operates like a mutual fund. Okay, only as per the name only we'll find out difference. But as a layman, if you like open a demat account and you buy these units and all, you couldn't find any difference between this mutual fund and the business trust. The only difference is like this business trust will not invest directly into the companies. What they will do means this business trust will, let's say if it is a real estate investment trust, this trust will pool money. Okay, just like as mutual fund, it will also pool money. With the money pool, they'll develop certain real estate projects, some commercial complexes, shopping malls, or like all these, like if you look at the Gachipoli, all those buildings and all those majority of buildings are developed by these kind of real estate investment trusts only. Co-working spaces. One floor might be taken by Accenture. One floor might be taken by Deloitte. Okay, so these people will develop those projects and give on rent to those corporate companies. From them, they will be earning rental income. If you buy a unit in this particular trust, the trust will invest your money into developing a project. From the project, they will be getting rental incomes. That rental income share you will be getting. Okay, so these are the units of business trust. Listed equity shares, units of equity oriented fund, units of business trust. These three are covered under section 112A. Section 112A. On this, the tax rate is 10% and exemption 1 lakh. Tax rate 10%, exemption 1 lakh. This is still when, sir? First write down that one. Tax rate 10%, exemption 1 lakh. Whereas there is an amendment here, sir. From 23rd July 2024, this has been amended. I mean, if the sale or if the transfer has been happened from the date 23rd July 2024, on or after 23rd July, on or after 23rd July 2024, then the tax rate is, there is an increase in tax rate, 12.5%, whereas the exemption is like 1.25 lakhs. Whereas the exemption is like 1.25 lakhs. Then others are covered under 112. Other long-term capital assets. Sir, long-term capital gains. On what long-term capital gains will come? Long-term capital assets. On transfer of long-term capital assets, long-term capital gains will come. Other than these three long-term capital assets, listed equity shares, units of equity-oriented mutual fund, units of business trust, all the others are covered under 112. So what is the tax rate on these others? It used to be, sir, the tax rate 20%, indexation available. Indexation available. Indexation available. Tax rate used to be 20% and indexation is available. Whereas from 23rd July, whereas from on or after 23rd July 2024, on or after 23rd July 2024. Sir, again, understand, these points require much more detailed explanation also that we'll be discussing again in capital gains chapter. Okay, so don't worry or don't think like everything will understand here only. Just the rates we are understanding now. The detailed explanation, when indexation is available, when indexation is not available, what are the tax rates, how to compute, all those things we'll learn in the capital gains chapter only. On or after 23rd July 2024, then the tax rate is, one option is like 12.5%, indexation not available. Sir, here it is 10% only. First one make it as sorry, correct only. Okay. Again, there is another option also, sir. You can take 20% also, but then indexation is available. We'll understand on which assets it is. After 23rd July 2024, there are two options. Without indexation, 12.5%. With indexation, it is 20%. So majorly, sir, they'll not ask the situation before 23rd July. Probably they'll ask only after 23rd July only they'll ask. Okay. If at all, okay, the examiner that time has some psychic feelings and all, then he may test like, he may give both the instances like before 23rd July, one transaction after 23rd July. Okay. That's why. So we don't have any other chance, sir. We need to by heart these things only. Understand, for the listed equity share, units of equity oriented fund or business trust, it used to be 10% till 23rd July. But from 23rd July, it has increased to how much? 12.5%. Whereas on others, previously it used to be 20% with indexation benefit. Whereas now, 12.5% without indexation. Majorly that is only 12.5% without indexation. This 20% benefit with indexation is available only with a limited scope. That also we'll discuss. Okay. So majorly you should remember this thing only. Okay. The major important one is like this particular one only most important. Okay. In future also this things only is going to continue most probably. Okay. First they introduce that particular rate only 12.5% without indexation. Then people started against the government. I mean, they are saying like, how could you suddenly drop indexation benefit and all? Because A person got a property from their great grandfathers and all. That time his grandfather bought for only 500 rupees. Now that property value is 5 crores. If there is no such indexation benefits and all, on straight away 5 crores you need to pay 12.5% as tax. And you have only that property. Okay, the only property you are having is that house. That house somehow, okay, it was there in Hyderabad only, assume. Okay, from 60, 70 years, that property is there with your father, grandfather, like that only it's coming. Now suddenly they need to pay so much of taxes. Okay, that's why, if at all for any reason, like for their daughter marriage or for something else, if they sell property, 12.5% they need to pay tax, which is too high. That's why they again started giving what? Indexation benefit, but that is available only to individuals. Whereas to the normal persons and all, it is what? 12.5% only without indexation. Okay, all those we'll discuss detailedly in the capital gains chapter. Then short-term capital gains. 111A. The same assets will come, sir. 112A, what assets came? The same assets will come under the 111A also. What are those? Listed equity shares, units of equity oriented mutual fund. Third, units of business trust. Units of business trust. Listed equity shares, units of equity oriented mutual funds, units of business trust. It used to be 15%, sir. I'm not writing it more clearly. I hope you'll understand now. It was changed to 20%. Which date and all you can easily understand. Which date? 23rd July. It used to be 15%, but now changed to what rate? 20%. Listed equity shares, units of equity oriented mutual fund, units of business trust. Whereas on others, normal tax rates. Normal tax rates, whichever the method you choose. If you choose default regime, then the default rates applicable. If you choose the old method, old regime, then old rates only applicable. Others, normal rates. So usually, sir, when we call special rate incomes, we'll think like a whole capital gains as special rate incomes. But only out of capital gains, there are 4 different types of incomes. 3 are only special rate incomes. The fourth one is not a special rate income. It is taxable just like a salary or business income only. If it is short-term capital gains arising from other than listed equity shares, units of business trust, or units of equity-oriented mutual fund. Understand? Hello? Okay. Then the other special rate income, sir, that also will complete here. Casual incomes. Casual income. What is called casual income, sir? Casual incomes under section 115 BB. Casual. Lottery, betting, gambling. Why they are called as casual? Because you will not put much effort towards them. Okay, they'll come. Okay, there is no effort needed. Randomly also those amounts are going to come. That's why they are called as casual incomes. 115 BB. The tax rate is like flat 30%. Taxable at 30%. Taxable at 30%. Then net winnings from online games. because these days the bettings, gamblings, everything are online. So that why net winnings from online game. So don't ask about cricket bettings and all. These people used to promote us are YouTubers. So from those apps, if I get revenue, that is taxable here. Those are illegal, sir. Cricket betting is illegal. Okay. So but there are, if at all you get winnings from Dream 11, then it is legal. Okay, Dream Level is different. The other cricket bettings are different. Okay, net winnings from online game under section 115 BBJ. Taxable again at flat 30%. Then undisclosed income under section 115 BBE. Undisclosed income. Undisclosed income, sir. We'll be learning that concept undisclosed income also towards the end of the chapter. So for you now to understand, let's say what is called undisclosed income means, in a particular financial year, in your account, there is some 1 crore credits. 1 crore amount has been credited into your bank account. Assessing officer sent you a notice. You said like 1 crore is, so okay, something you got randomly, or else like you give some explanation, or if you didn't give any explanation, you are not explaining properly how you got that 1 crore rupees. If you don't explain the source for that 1 crore rupees, or the explanation is not satisfactory to the assessing officer, he'll call that 1 crore as undisclosed source of income only. Or else, in the current financial year, you purchased a land for 3 crores. Then again, they'll come and ask you the source. If you could explain the source, fine. If you cannot explain the source, nor the explanation is not satisfactory, again, that 3 crores is what? Undisclosed source of income. And then they came for some search operations to your home. And during the search, they found cash, gold, and other some jewelry, such things and all they found. Again, they'll ask, what is the source? If you could explain the source, then no problem. If you cannot explain, nor the explanation is not satisfactory, again, undisclosed source of income. 3 things. Fourth one, sir, unexplained expenditure. Unexplained expenditure, now let's say, our Bardo has a grand wedding. In movies and all we see, not movies, in news and all sometimes we'll see. Like they have spent crores of money for weddings and all. Like for everyone who came to marriage, they might have given some gold rings as gift. Like those things and all. So something they have spent 50 crores on marriage. Then immediately department people will come, have food there, and then again they'll give notice asking what? For this 50 crores, what is the source? If you provide source, fine. If you cannot provide source nor the explanation, again it is also called as what? Undisclosed source of income. Lastly, sir, fifth one, you are having some undisclosed, you are having 50 crores with you. They are asking you how you got this 50 crores. You are showing them a promissory note. You are showing them a promissory note stating like, I have taken this 50 crores from my friend yesterday only. See, this is the promissory note. But still, they'll go to that person and I'll ask him. If that person cannot explain the source of that 50 crores, again it is undisclosed source of income to you only. Because that 50 crores is found with you. That's why you are treated as what? Having undisclosed source of income. So what is the tax rate on undisclosed income? Tax 60% plus surcharge at 25% plus cess at 4%. Sir, the undisclosed income is only 30 lakhs, sir. Then also surcharge is applicable. Yes, irrespective of how much is the undisclosed income, surcharge is mandatory here. Tax 60%, surcharge 25%, cess at 4%. Effectively, the tax rate will come to 78%. Undisclosed income. Then fifth one, transfer of virtual digital assets. Transfer of virtual digital assets. What are these virtual digital assets? Now, these assets will be there only virtually. You cannot find them physically. Example, bitcoins. Transfer of virtual digital assets under section 115 BBH, again taxable at flat rate 30%. Transfer of virtual digital assets. Virtual digital assets, na, nothing but take the example of bitcoins. In the lockdown trend, so many people used to purchase bitcoins. Some people lost money. And then, if at all, they hold, even in the recent US elections, that time also, if they hold bitcoins, then again, they have got so much of earnings. No. Surcharge will levy on tax, right? So 60% plus, okay. Tax 60%. Surcharge will be levying on tax. Cess will be levying on tax plus surcharge. Okay, like that. So 60% plus 25%. I mean 60 on 60 you should apply 25%. Then it is 15. So 60 plus 15, 75. On the total 75 again apply 4%, which will come to 3%. So that's why it is 78%. Okay. So these are the special rates. Now, all these rates are no other option for us. What we should do? Except by hearting, there is no other route also. Okay. Okay. If at all there is something like directly inserting a chip, those things and all will not work. Okay. All these things actually should have learned at interlevel only. Okay, but you didn't learn there. At least now what you should do? Learn. These people not even coming to classes properly. Sir, we'll discuss the concept of rebates, sir, now. Then we could close the session for today. Rebate under section 87A. Rebate under 87A. So DT, I'm again from the beginning I'm saying do cumulative revisions. Cumulative revisions, na, like till the first 3-4 chapters are going to complete, every day you should revise. And then that also what? Not only today's class you should revise. From the beginning of the class, you should keep on revising. After 10 days, you might think like, sir, if you need to revise so many pages, it will take more time now. No, it will not happen like that. First page, if you open itself, you will remember what is there in first page. Then second page, third page, so immediately it gets strike to you. So it will take only 5-10 minutes only to revise the entire chapter also. Do such kind of cumulative revisions, at least, okay, then only you could recall the provisions exactly. Okay, if you come and ask us something like in mid-November, you'll get tension. Sir, I didn't cover anything in DT, what should I do now? What should you do now? There is no chip installation and all, or direct Bluetooth transfer, share it, all these don't work for us. Okay, so that's why the only option available is like from now on, keep on revising it as many times as possible. One student will come and say like, sir, I revised 10 times, but still I didn't remember. Then do 20 times. Okay, then do 20 times, then you will remember. Okay, that's the only way we could remember. There is no other alternate way. So that fellow remembered, sir. That fellow remembered, na, without telling you, he might have revised. more number of times. That's the only thing. Okay. Rebate under section 87A, resident individual. So rebate is applicable only to whom? Resident individual. Other than resident individual, others will not get the rebate. Again, under old regime, sorry, first this side we are writing new regime. Under new regime, since he is individual now, two regimes are there. Under new regime, under old regime. New regime is also called as what, sir? Default regime. Okay. Under new regime, two branches, sir. Total income less than or equal to 7 lakhs. Here total income greater than 7 lakhs. Total income less than 7 lakhs, less than or equal to 7 lakhs. Then the next one is like total income greater than 7 lakhs. If the total income is less than 7 lakhs, less than or equal to 7 lakhs, then the rebate is 25,000 or tax payable. $25,000 or tax payable, whichever is less. 25,000 or tax payable, whichever is less. Sir, understand again, if you remember the format, without cess this tax payable, because surcharge and rebate will come at the same step. After adjusting rebate only, we will go for cess. So this tax payable is what? Without cess. So the order is like first total on total income, tax. On tax, surcharge. Surcharge and rebate will not come at the same time. Okay, either surcharge will come or rebate will come. So after surcharge and rebate step, then the third step is what? Cess one. Okay, that's why here 25,000 are tax payable. So this tax payable now without cess. Sir, previously it used to be only 25,000 are tax payable. But under the default regime, I mean the new regime, they made one more amendment here and implemented something like marginal relief here also. Something like the same concept like marginal relief only implemented when the total income is more than 7 lakhs with respect to rebate. Understand? Where the total income is greater than 7 lakhs, then you should calculate the stepwise, sir. It is little complicated, something like marginal relief only. First, step 1. Total income minus 7 lakhs. You should compute total income minus 7 lakhs. Step 2, you should compute tax on total income. So straight away, first step itself, we are finding out the difference. If at all it's like marginal relief, this step 1 which we have taken is what? the difference between the given total income and the nearest surcharge limit. Here what we are doing, we are finding out the difference between the given total income and 7 lakhs. Okay, then we are finding out what step 2, we are calculating the tax on given total income. Step 3, or else straight away. If step 2 is greater than step 1, we'll do an example also, sir, don't worry. If step 2 is greater than step 1, then step 2 minus step 1 equals to rebate. If step 2 is greater than step 1, if step 2 is greater than step 1, then step 2 minus step 1 is the rebate. Sir, understand? A person is having 7,20,000 as income. A person is having how much? 7,20,000 as income. Will he get rebate or not? Normally, if at all, okay, forget about this particular provision. Only if you look at this provision alone, if he has only, say, if he has 7,20,000 income, then he become ineligible for rebate. Okay, now see. Total income is 7,20,000. Then, sir, assume the default regime only we are calculating. First, calculate the tax. Okay, I'm calculating both the cases. Total income 7,20,000 I taken, and then total income I'll take 7 lakhs also. Just like as previous explanation, sir, there are two people. Assume one as Raju, other one as Bhargav. One is having total income of 7 lakh, the other one is having total income of how much? 7,20,000. If total income is 7,20,000, what is the tax? 3 to 7 lakhs, 5%. How much? 4 lakhs into 5%, 20,000. Plus this 20,000 into 10%. So total tax will be how much here? 22,000. Here the tax is how much, sir? 20,000. But okay, if at all this second adjustment is not there, then what happens here? Here rebate is available. What is the rebate here? Rebate under section 87A, 20,000, 25,000 or tax payable, whichever is lower na. So you'll be getting how much as the rebate, sir? 20,000 rebate you will be getting. So on subtracting, the tax liability is 0. Whereas here there is no rebate available. Yes, now because of this marginal relief concept, rebate is coming. But if at all there is no such marginal relief concept here, there is no rebate available before amendment. So since no rebate available, okay, don't copy this, sir. Okay, since no rebate available, he is ending up with paying how much tax, sir? 22,000. That means he is earning how much extra income? 20,000. But for that, he is paying how much extra? 22,000 extra he is paying. That's why they wanted to give rebate. They wanted to give rebate. So in this case, what is the rebate, sir? First, what we are doing? Total income minus 7 lakhs. What is the total income? 7,20,000. From there, if you subtract 7 lakhs, what is the answer here, sir? 20,000. Then compute tax on total income. What is the tax on total income, sir? 22,000. 22,000. So then what we have to check? If step 2 is greater than step 1. If step 2 is greater than step 1. Yes, step 2 only greater than step 1. 22,000 is more than 20,000. Then what is the rebate available in this case? Step 2 minus step 1. That is 2,000 is the rebate available. 2,000 is the rebate available. Okay. Just again, the incremental income should not be more than incremental tax. There surcharge is the factor which is impacting. Here which is impacting? Rebate. That's why an additional rebate has been introduced, sir. This concept is not there in old regime. If at all such loss is there in old regime, there is no counter rebate happening in old regime. Only in new regime, that also from the last previous year, not the immediate amendments. This is there from June 2024 exams only. Okay, from that time this amendment has been introduced. Even your income exceeds 7 lakhs, still you are eligible to get rebate. What is the rebate amount? The rebate amount is like the difference between the 7 lakhs and your total income and the tax liability. Okay, such difference amount here 2000 is only the rebate available. Nothing but the incremental income is the incremental tax is restricted to that of incremental income. That's the logic here. Okay, so here in this case rebate available. So what is the rebate available, sir? Here calculate above steps. On doing above steps, we'll get how much as rebate, sir? 2000. Then the tax payability is how much? 20,000. Okay. Under old regime, sir, it is simple only. Not there is no such concept of this additional rebate and all. Okay. Total income should be less than or equal to 5 lakhs. Total income should be what? Less than or equal to 5 lakhs. Then the rebate is 12,500 or tax payable lower. $12,500 or tax payable, whichever is lower. Okay. So please revise all these things and come, sir. So once if you revise these capital gains tax rates also, we'll do 1 or 2 examples tomorrow, including the capital gains income, the special rate incomes, and then we'll try to calculate the tax calculation and all. Okay, just for practice. If you cannot recall the tax rates immediately, then it's of no use we doing such examples.